Hey guys, welcome back. Patrick here. There is such a huge disconnect between Wall Street and the economy and the companies in our portfolio that are reporting record amounts of revenues and profits that is just laughable at this point. This video, quick update, I just wanted us to look at one of the announcements from a company in my portfolio that really foretells what's going to be happening over the next couple of years in the stock market. Now, I don't even need a crystal ball or anything to predict what's going to happen because the companies are telling us, right? They're not focusing on the inflation. They couldn't care less about the crypto crash today. They're focusing on their revenues, their profits, and giving money back to the shareholders. So let's take a quick look at the announcement, how it's going to affect you in the next couple of years, and we'll talk about the forbidden word that as a YouTuber, it's almost like taboo: profits. Alright guys, I don't know if you saw the news, but there was a big announcement by AMD today that is going to really have a big impact on the rest of the market, in my opinion. So for all of your companies in your portfolio that have revenues and profits, if you're not all in spec plays, this is going to be very, very important. So today, the announcement only made the stock price go up 2%. I know that's not a lot, right? But I feel like it's going to have an impact over the next year, along with everything else good going on for the company. So, you know, when you look at it, it has been sitting on its support of $74 for a while now. It has been in a long downtrend. So the fact that it actually pushed it to 76 bucks while the market is down is actually a pretty good sign. I mean, in the morning, pre-market, the NASDAQ was down pretty big, right? So what did they actually announce? Well, they announced the first big share repurchase program in its history. So up to $4 billion. And this is a company that never did that in the past because they were never that profitable, right? So we are at a point right now in the economy, we rebounded so hard from 2020 that you have a lot of companies that make so much money that, yeah, they're going to be reinvesting in the business. Like this company that is investing heavily into R&D. But they're getting to a point where they don't even know what to do with the money. So I'm going to show you others later on in the video, right? But they're going to be buying back $4 billion worth of shares. And that is extremely important because look at the company's market cap right now, $92 billion. So they're going to be buying back about 5% of the market cap. And that doesn't really paint the entire picture because a lot of the shares, like the float of the company, well, they're not really traded actively, right? A lot of the institutions own these shares long term. You have the ETFs, and also, of course, you have the insiders of the company that own shares that are not really traded actively, right? So when they're going to be buying back shares, they're literally taking shares away from the market that are usually traded by retail investors like us or traders, right? So a company like this that has a volume of average 45 million shares, right? Well, those shares are the ones that are going to be bought back by the company during this program. So that has big effects on the company's valuation, of course, right? And it really puts a backstop to what's going to happen with the share price in the next year. So anytime the stock drops, the company is going to buy back shares and kind of support it. So that is extremely, extremely important because not only does it tell us that the companies are doing really well, but it tells us they couldn't care less about the inflation that on TV they keep talking about. They couldn't care less about the supply chain problem. You don't announce a $4 billion buyback if you think that the company is going to be struggling in the next year. Think about it that way. If it's good enough for Lisa Su, one of the best CEOs in the market, it is good enough for me. I'm very happy with these news. Now, other things that we need to look at, right? So this is very good for AMD, but it's not the only company. So Jamie Dimon from JP Morgan Chase recently said that they have so much money that they can't even just reinvest in their own business. They have to give the money back to their shareholders. So Goldman Sachs recently did a report on this, and they're talking about how this is going to be a record wave of share buybacks in the next couple of years. The companies feel very, very confident about giving money back to the shareholders in the forms of share buybacks, especially versus dividends. The big problem with dividends is that once you start a dividend program in your company, well, it's kind of like a recurring thing. You can't really stop it very easily, or your shareholders are kind of upset with you, right? Look at what's happening with AT&T right now. the dividend is getting cut, so a lot of people are selling, and in some cases at a loss. So that is not the way to go. When they do a share buyback program, it's a lot more opportunistic, right? If the company has enough money, they're going to be buying back shares, and it just gives them more options. If there's a pullback like in 2020, that's what MGM did, right? In 2019, they installed a $3 billion share buyback program. Well, in 2020, it wasn't very appropriate to buy back shares, so they just paused it. And now they recently announced that they're going to be restarting it, right? So companies like these are actually going to be buying shares back, and that's going to help us as shareholders. So how much are we talking about? Is it going to have a big impact? Well, according to Goldman Sachs, we're talking about $484 billion announced just in the first 4 months of this year. So that's going to continue throughout the rest of the year, 2022, 2023, and that is going to actually be massive because think about it, right? A lot of people have been asking me, and by the way, I appreciate all questions, whether you're a newbie or an advanced investor, just keep asking. I love answering questions. It's no problem. All right. So a lot of people have been asking me, well, what about the lost decade? What about the great deleveraging? What if we have 10 years where there's no real market movement and we're mostly flat? Well, that's the thing, is that through buybacks and through dividends, it's like an artificial way for the companies to boost their value, right? When you lower the number of shares in circulation, it makes the share price go up. It's kind of like if you make improvements to your house. It's called forced appreciation, right? It's something that the companies can control. It is another tool in their arsenal if they're actually generating profits. And that's why I keep saying, right? Yes, we want to go with some plays that are more growth oriented and that have a long ramp for the next few years and can really increase their revenues. But also, it is not a bad idea to have in your portfolio some companies that are a little bit more established. And yeah, they're not necessarily going to double, every year, but if you can get a 20-25% returns, you're going to beat the market and your portfolio is going to grow really quickly. Companies like these, right? So yeah, they're going to only increase 35% compared to 2020. And then when you put it that way, it doesn't look like the buybacks are that big. But if you go down a little bit and you look at the graph, that's when you're going to see how massive this is, right? So look at 2021 versus 2019. It's a lot more share buybacks than back then, right? And it's actually higher than the past 2 decades. So this is the way we're going in the next couple of years, right? So there's going to be a lot of buybacks. There's going to be some dividends. And again, they don't really care about all the noise in the on TV and everything right now. All they care about is the profits that they're making, and they're going to give it back to us as shareholders. So I'm not concerned at all about it. As I was talking about earlier, Jamie Dimon, look at this quote, a little bit facetious: "Our cup runneth over." So I'm not a poet like he is, right? But what he's saying is that they're making so much money that they don't know what to do with it. All right, so one of the things that I like in a company is that when they make a lot of money, is for them to reinvest in it, like do mergers and acquisitions, not just do a dividend or even a share buyback. Because when you do that, it shows that you don't have anything better to do with your money, right? So companies like AMD that are buying Xilinx right now is a really, really good thing. Or when Tattooed Chef buys the tortilla factory, that's a really, really good way to use your money to actually increase your growth in the future. But there's nothing wrong with doing a little bit of both if you have enough money to do that. And once again, that's the benefit to investing in at least some companies that are making big revenues and big profits. All right, guys, before I wrap up the video, I just want to show you a couple different companies that do have these buyback programs and kind of dispel the myth that it's only baby boomer stocks. And since we're younger, right, we shouldn't be looking at those stocks. They're not worth our time. Well, JP Morgan and other institutions, yes, traditionally are seen as that type of stock that's going to be giving the dividend, and it's more of a slow form of investing. So they have the $30 billion worth of share buyback program right now. But there's many others, right? A lot of companies that you like and I like. Companies like Apple, they already did $77 billion in the past year, I believe, fourth quarter, and then they're adding another $90 billion in repurchase authorization. So Apple is kind of an interesting case, right? They have tons of money piled up, which they need to be deploying very soon to kind of bring out new products, right? They keep talking about the Apple car and all of that, but so far they haven't really deployed a lot of that money. So for now, temporarily, they're going to use their big stockpile to give some of it back to the shareholders. All right, so if you're an Apple investor, I'm not right now, but you know, that's kind of like a bonus to this investment. It's not what you want the company to focus entirely, but it's a nice little kickback. And then there's other companies that, you know, are seen as growth stocks, like Facebook, right? It's supposed to grow 30% this year, and they're still giving shares buybacks, right? 25 billion in the case of Facebook. Right? So it's not just boomer stocks, it's also tech stocks. And then the last one I want to talk about, of course, is one that's in my portfolio, is MGM. But what I want you to pay attention to is in the latest quarter, they talked about how they bought back shares, right? 3.15 million shares, and the average price was $37.87. All right, so you guys know that the market has not been doing that well over the past couple of months, right? It has been a big struggle for a lot of stocks in our portfolio. Well, look at the chart for MGM. Like, this is $37.87. This is where their average purchase price has been, right? Well, what's happened with the stock price? Has it dipped under it? A couple of times, yeah, but what keeps happening to it? It bounces back above it. Why? Because the company is defending the stock using these buybacks. In the case of MGM, they have another 2.9 billion to go, right? So that's really going to help support the stocks over the next few months if there is uncertainty in the market with all of those companies that do have these share buyback programs. All right, so that's all I have today for you. I mean, if you guys want to look at your own stocks and see if they have some, if they're making profits, do like the name of the ticker and then share buyback, and you're going to get more information. As I said before, it's not necessarily a strategy that you want to focus on, but it is a nice little bonus for a lot of the stocks in our portfolio, and in cases like these, it really helps support the price. All right, guys, I'll see you next video. Let me know in the comments if you have any like feedback on this. I'll talk to you later.